Good afternoon, everyone. Today I'm going to do a rare midday video where I'm going to attempt a midday market live stream, which I've only done one other time in the history of this channel, but we'll see how it goes. I may bring this back. And the difference today, I have a carefully put together script that was put together for me. So where is that? Oh, here it is. Oh, thank you. So that was so nice of you to write a script for me. So let me start here. Wait a second. This is a This is a pizza menu. You said a script. What? I can't do this. We'll do it live. We'll do it live. See, this is why I have to do stuff live because, you get scripts that are crap. Anyway, so market live stream today. So I wanted to wait actually until the market was green. We've had several red days for the market. And what we'll do now, so I'm going to structure this video is going to be no script, by the way. But I'm going to first go over how the market indices are doing right now. And then I'm going to cover the headlines driving the market. And then we're going to analyze some potential earnings plays. And I may even, if we're lucky, I may even place a trade live. So spoiler alert, the company I'm going to talk about later in the video is right here. But before I get into that, I just want to go over. So right now the Dow is finally up 178. It opened up around 100, but the market the market appreciation for the day has gained some momentum, and we're seeing the same thing with the Nasdaq, with the Russell 2000, and with the S&P 500. Percentage-wise, the Nasdaq is actually up the highest, and what's driving this today? There's starting to be some slowing down in inflation and concerns about further increases to the Fed funds rate, further interest rate increases. And what we saw, one really good sign, energy prices, which I've been saying from the start. I've been saying that energy has been the main driver of inflation, and there was nothing the Fed could do about it. But what will happen, and as we're seeing now, actually the national average for gas prices has finally dropped to where it was this time last year, which is great news. But what's going to happen is the Fed and Papa Powell, they're going to take credit for it. They're going to say, see, it was us, raising interest rates and whatnot. But the good news is if we can have energy prices stay low, and if you see crude oil right here to the right side of the screen, it's down to 72.50, and this is why. So oil prices are dropping, so energy costs are falling across the board finally, and that is going to help inflation drop. Now it remains to be seen if a lot of these businesses that have raised their costs will drop them. That usually doesn't happen. You get the price increase quick, but you typically don't get a cost reduction as quick or at all. But what you'll notice with crude oil, so we peaked at like 120, almost $121 a barrel back in June 4th. And we've been on a steady downtrend since then. So put options or, selling calls, any kind of a bearish position would have been a great play over the last 6 months, because oil has thankfully been consistently falling. And now we're back to, I believe we're actually on par with where we were a year ago. Hence why the gas prices are on par with where they were a year ago. So what's going to happen, and I can predict this, we're about to see a big turnaround, I believe, because if energy prices can stay low for the next couple of months, the Fed will take their foot off the gas pedal. And it's going to take a couple months for this to reflect in the CPI numbers, the PPI, all those indicators. It's going to take a couple of months. But once it does, it's going to be very good news for the markets. And the market today is, I believe, pricing some of this in. So I think by first quarter 2023, we could actually see a nice bull run, I believe. The bleeding may finally be over. And like I said, if this holds to the point it starts to show up in the actual economic data, because there's a few months lag, but if it starts to show up in the data, we could be sitting very pretty by March. So now might be the time to buy low, because the basic equation: buy low, sell high. With all that being said, let me go into the upcoming indicators that are coming up. So this site that I use called Forex Factory, there was no major, except for unemployment claims today. Let me refresh this because I didn't actually look at the number. That's probably driving. Actually, it met the forecast. And I always find that a little bit strange when the numbers meet the actual forecast. Usually there should be some variance, whether it's positive or negative. And let's see. Next one, tomorrow, we have core PPI and PPI month over month and preliminary UOM, consumer sentiment, a lot of US based indicators tomorrow. Inflation expectations, final wholesale. So if we get good numbers tomorrow, the market could surge tomorrow. Now, with that being said, there's a new site that I found. And those of you that follow me regularly, you know that I've talked about building out my own earnings calendar and stuff like that so that I know, and so that all of you that follow me know when earnings are coming out for a given company. Well, it looks like I don't even need to do that now because, well, for one thing, I just discovered this morning because I was looking at, I've been following Orcl, and I may be a day late to the party, but look at this. The iPhone stock app now tells you, it now tells you when earnings are coming out. And it's actually right here, Monday, December 12th for this company. So I got my eye on this one. So now, even better than that, there's a site I found called earningswhispers.com. And Earnings Whispers actually tells you, it gives you exactly what I thought I was going to need to create manually. So this takes a lot of the guesswork out of it. Now, it has a lot of information free, but for the premium services, you have to pay for it. But you can find the basics of what you need for free. So it's got at the top here the key companies whose earnings are coming out within the next week or so. So Orcl, it's got December 12th coming out. It's predicted $1.24 earnings per share. Jabil Circuits, General Mills, Darden. So let's go in and let's look at Orcl. So Orcl, you've got the consensus number. You've got revenue consensus here and some strange ads popping up on the screen. But the stock is already up almost $1 today, which is why I say it might be like a day late to the party. It gives you some key indicators here, some key data. So, and it actually maps out, instead of you even looking at the chart, it's got support and resistance levels here. So this is how it could move in one direction or the other to the point that it hits resistance or hits support. So this is the potential range when you're deciding what options you may want to do, what you may want to trade. Those are key things to look at there. As far as growth metrics, it's got expected quarterly earnings, quarterly revenue, expected annual earnings, annual revenue. So you see it's kind of a mixed bag. Short-term price, intermediate-term price, long-term price are predicted to be up. So for me, looking at options plays, which we're going to do next, I would look at a leap option on this because in the short term, I don't know what any of this is going to do, to be honest. And I think it's got a good chance of going up, but you never know. We're in a very uncertain market, even though what I just said earlier in the video could be very likely. You never know. It's never guaranteed until it happens. And there are no guarantees in life. So you got to make decisions based on what information you have. So now I'm going to go into Thinkorswim by TD Ameritrade, which actually got acquired by Schwab. So I don't know how that's going to change, but I really like Ameritrade. So I hope nothing major changes. So I'm in Thinkorswim here. I'm going to type in Orcl. And this is actually a live trading account. This isn't like a dummy account. This is the real deal. So, okay, it took a minute to come up. I'm on a past date here. I need to go to current date, and I'm going to look. And if I like this trade, I may actually get into this trade now. And that way, it's not just me saying, hey, I like this, I'm going to do a video about it. I'm actually doing it myself. You know, how cool is that? So I'm going to look at, let's see, trade. And for some reason, I haven't figured this out totally, but I've got this defaulting to futures. Let me go to all products here. I normally do this on my phone. I rarely do this on the desktop app. So let me go to Oracle here because what I was on before was the think back screen. That's where you back test. One of my favorite things they offer, by the way, the think back. So I'm going to go to Oracle, and this could either be a brilliant move or it could be a completely dumb move. And I'm sure you all will let me know in the comment section one way or the other, or you may not comment at all, but preferably you'll comment. So, um, okay. So I would completely, December 9th is tomorrow. I wouldn't touch that with a 10-foot pole. December 16th is too soon. All of these are too soon. So I would want to go out further. So I've got to set my filter to, I would go 365 for the whole year. Because I would look at a leap option because I think within the next year this could recover nicely. Now, real quick, if we jump back to the main screen, I think this is sharing. Let me just do a little spot test here. Let's see. Okay, I saw that it's sharing the Thinkorswim, or TOS for short. So let me go back into, or did I? I didn't go into Oracle at all, did I? Now it's up $1.04. See, we're talking about it's going up. That's always nice. Okay, so let's look at, because this stock was trading much higher a year ago. The stock was at, and the funny thing, I did a video on this almost exactly a year ago because, and the reason I thought about this, I actually went and looked because I remembered the video because Oracle stock, I want to say on December 9th, 2021, had like a 15% bounce, which would have made you thousands of dollars if you played the right option correctly. I didn't do it because, so here's the thing, I found out like that evening. I was in class, I just finished school. I finished my master's degrees, but I was in class. I was, looking through my phone during a break, and I said, "Oh crap, Oracle earnings are coming out," and the market was already closed. This was like 6 or 7 o'clock in the evening, and I saw that the stock was way up in after hours trading. I'm like, darn it, I missed the boat on another one. So that's in my mind. And this is what I said going back to the Danaher video, the 640% gain, which I did hit, that my biggest win ever. I'll link to that as well. But this is why, this is how your mistakes can lead to future wins, because you're thinking that, you missed this big boat over here, but there's another boat coming up on the horizon that you can hop onto, and ride it for gains. So having that in the back of my mind, I'm like, that's right. Oracle earnings come out around this time. So I happen to check. I'm like, yeah, sure enough, they're coming out Monday. So this time, if this sets up again, I'm not going to miss it. And I'm doing a video in advance. So any of you that watch this could potentially do this too. And like I say, there's no guarantee that this will work. Like, they could miss earnings completely and this could drop. But this is why if I do anything, it's going to be a leap option. So what I'll do here, because you can actually see this better on Yahoo, then I'll jump back to Thinkorswim. So I'm going to look, I wouldn't look at anything under probably the next 4 months. I would even go out possibly to like September 15th. Let's look at that, see what happens. And it's going to be more expensive because you got more time value because it's further out into the future. So I'm looking at, oh, what was the stock at historically? Let me, I think it was over $100 last year. That's what I was trying to say, but I was rambling again, which I tend to do. Okay, so a year ago, it was $102. This time, on this exact day, a year ago, almost, it was $102. So my thought process, without doing a ton of analysis, I think it could at least get back to 85 or 90. Could even get back to 100. If the Fed starts cutting interest rates, we'll have a run up in all these stocks again. So I want to look at, like I said, I wouldn't touch anything in the next 4 weeks. If you want to be really risky, you could potentially go January, February, March. But you see, because they don't add the weeklies until you get closer to the time. So you can see like in, there's only one for February, there's only one for March, there's one for June, one for September, because this is on that cycle. Some of them are like, there's an August one instead of a September monthly. That's based on the cycle the options are on. I know that, but can't think of the exact rule off the top of my head. But they're basically on a calendar, essentially, just like earnings. So I would probably look at the September 15th. It's like 9 months out. Um, and I would look at see it's cheaper, and this is how options work. The further out of the money you are, the cheaper it is. Like the ones over $100 are actually dirt cheap. So you could get one contract for like 182 bucks. And like I said, this could be a completely speculative dumb play. You can see the implied volatility over here to the right, and this is just Yahoo Finance. Um, but yeah, I would go. You could go 100. I would possibly go 105, 110. 115 is lower, you'll notice, and there's probably a reason for that. But let's go fishing here. Let's go look at this is like it's around lunchtime, so it's like casting that rod and reel, fishing for the big fish or the little fish that grows into a big fish. So let's see here. September 15th, and this shows more fundamentals here. This is kind of like the back end of the screen. So I'm going to look at, let's see. That's the put side. This one is, see, there's the bid and the ask. There's always a variance. Um, let's see. Let's just look at the 110. Let me pull it up on my phone. I'm going to have this up here for the visual, but I'm going to pull it up on my phone. And give me just a second here. Just kind of look at all this while I'm pulling this up. Where are we here? I've got so many apps on this phone. Oracle. And a lot of options traders don't want to play earnings. They think it's dumb, but I like to do it because it's worked. It's worked for me enough that I think it's worth it. So let's see. Okay, I'm gonna look here. I just the mobile app works better for me, so I'm signed in on both. I'm looking at September 15th and 115. Yeah, that one's at 92, but it's going up because the stock is going up. The stock's at almost $80 a share. So like I said, I'm about a day late to this boat. I should have done this yesterday, but priorities, right? Theta is pretty low on it. The theta is 0.93, and that's actually on here too. It's rounding up. It's actually I have this the setting is like rounding. The delta is 0.15 on the 110, 0.1520 to be exact. So that's the probability of it ending up in the money. Delta is much higher. Obviously the closer to in the money you getting a phone call, I'm going to decline it. Everybody likes to call me during a live stream, of course. That's the rule of thumb. And if you wonder why you hear it, I have my phone on silent, but because it's linked to my MacBook, which I record on, that's why the phone, that stupid, ringtone, the default ringtone, that's why you hear it, because I have to have the MacBook volume up to record. So anyway, with that being said, I'm looking at the 115. This could be, fundamentally kind of stupid, but I'm going to try it. So let's see. Actually, let me see. I'm going to make a decision here right now. It's either 110 or 115. What's it going to be? Flip a coin? Nah, not when trading. Um, hmm. Theta's lower. Delta's lower too. But you know what? It's $108. There's a chance of it. There's a chance of this working. So let me see here. I have it. I'm going to try to do it here. I don't want to do 10. I want to do just one. So just one of the September 15th at 115. Dang, that stock keeps going up. Let me see. 110 or 115. What's 105? No, that's more than double the cost. I might go 110. Yeah, heck with it. I'll just go 110. Let me see first. Let me see what it's what this has actually gone up to today. Um, it's up 30 cents basically. So to control 100 shares, um, you would have bought this for $126. It's gone up. Basically, you would have made $30 on just one contract. Um, so you know what? Let's just do two. Do two. See how it does. I'm gonna place this now. Do it at the ask. The ask. I don't care. Um, yeah. All right. Confirm and send. So I'm doing two of them. Okay. Just did a live trade and I got filled on it. So that's all I wanted to cover today. That's how you do like an earnings play. Thank you all so much for watching. Please remember to like, comment, and subscribe. And oh, got one comment there. How's it going? Just did a live trade. Comments always help the algorithm. So um, anyway, this is a long video, but hopefully it was valuable. Again, like, comment, and subscribe. And thanks so much for watching. Take care.